Hey everyone, welcome back to Upside Down Data. In this video, I'm going to talk about some potential downside targets to watch for Bitcoin during this current pullback. So if you guys like the content, subscribe to the channel, give the video a like, and follow us on Twitter, where we put out regular updates about our risk indicators and more. So in the video that Mark put out yesterday, he talked about a few bearish signs that are flashing for Bitcoin. The first of those that he talked about was the trend confidence indicator, which showed a close below the midpoint. And oftentimes, historically, that has signaled continuation to the downside. Another is the momentum bias indicator, which has also been flashing bearish signs and signals continuation potentially there too. So there's confluence on the trend confidence indicator and the momentum bias indicator. If you want some details on how those work and how they complement each other, go and check out that video from yesterday. But the point is that they're both looking fairly bearish right now, more bearish than they have in at least a couple of months. A third really important indicator that we're seeing, and you can see this one on the chart that I have pulled up right here, is that we just had a weekly close below the 20-week moving average. 20-week moving average is a very important level. It's often considered to be a bull market support band or a bear market resistance band, because historically, weekly closes above or below that level have tended to precede continuation in that same direction. So this is a bit of a reversal from a couple of weeks ago when the price of Bitcoin pushed up on the weekly close above the 20-week moving average after spending a few months below it and closed up there, which looked like a bullish signal. Then it closed the second week above the 20-week moving average, potentially signaling that it was holding it as support. But then just yesterday, we saw during the day, kind of this scam wick up to the upside, followed by a pretty quick move down below the 20-week moving average before the weekly close. And then the weekly close down there. And that is also historically signaled continuing downside. And so what I want to do in this video is look at levels that we can watch if we're going to see continuation, which is no guarantee, but these indicators do suggest that that's at least a good possibility. What should we be watching, and how can we set ourselves up to take advantage of this dip, or at least not to get wrecked by it, if at all possible? So I'm going to point out a few different levels here that are important to watch. The first one is based on the VPVR indicator. That's the volume profile visible range indicator, and that's what you see up here on the right side of the screen with these bars sticking out from the right-hand panel. This is an indicator that tells you within a given price range, where has the most volume been transacted for Bitcoin or for whatever the asset is that you're using VPVR for. And that tells us where likely support and resistance are going to be, because where there's been a lot of transaction volume in the past, there are likely to be a lot of people who have orders waiting at those levels, first of all, but also people for whom those levels are very psychologically important because they represent a cost basis. So if you were a buyer at a given level and the price revisits that level, then all of a sudden the price has revisited your cost basis. We put out a video a few weeks ago about how people misvalue gains and losses. And one of the key takeaways of that video was that as the price approaches the cost basis for a buyer, the movements on the price become more psychologically impactful. People are really tuned in to price movements around their cost basis. And as the price moves further and further away in either direction from the cost basis, people become more insensitive to those price movements. And so that maps on to one of the reasons why the VPVR is important, because where there's been transaction volume, there are a lot of people watching those levels. What we can see here, looking at the VPVR, is that we're approaching a level where there's been a lot of transaction volume over the past couple of years, and that's the 39K level. So that's the first level that I want to turn your attention to. You can see right here over on the right that the bars get longer as we approach that level, and 39K is where we see that both all the way back at the beginning of 2021, where Bitcoin did a bit of consolidation in the middle of this parabolic move up to making its new all-time high during 2021. And then again, after it pulled back in the middle of 2021, it spent a great deal of time in that range, which really went up to about 39K. If we don't count these wicks, which didn't last very long, and we didn't see as much volume transacted at those levels. This most recent drawdown after the new all-time high that was made at the end of 2021 came back down and revisited that level, spent more time in the 39K region. We could say maybe 36 to 39K if we want to be, if we want to talk about a range instead of a point value. So we've had these 3 periods of time, beginning of 2021, middle of 2021, the end of 2021 into the beginning of 2022, where we've seen a lot of volume transacted at around the 39K level. And so if we're going to see continuation, as the TCI and the MBI suggest that we might, and as we're seeing clearly bearish price action right now, I mean, price is pulling back pretty substantially just since the weekly close last night, and it's continuing to pull back even as we speak, then 39K is a really important level to watch. So that's the first one that I'll draw your attention to. What's another important level to watch? If 39K does not hold, and it very well might, but if 39K does not hold, what would be another level to watch to the downside? What I would be watching then would be the lower bound of this macro channel that I've had drawn in for a few months now and that you might have seen pop up in previous videos. So far, since Bitcoin made that initial all-time high in 2021, it has put in a series of marginally higher highs and higher lows. The reason I say marginally is because this all-time high back in the end of 2021 did not get much above the previous all-time high, but nonetheless, it was a higher high, and the pullback that it subsequently put in did put in a higher low, respecting the lower bounds of this trend line. It then revisited it again in February, and so we've been bouncing off of this trend line repeatedly over a long period of time now. The more touches that we see on a trend line, the more credence we can give to it. And so that, I think, is a really important level to watch as well. And if we were to go straight down there now, it would be at about 35K. If it were to take a few more weeks, then that would continue to creep up, albeit slowly. So we'll be looking, in the 35 to 36K region, if 39K, where we see this increase in historical volume, does not hold. A next level that we would want to watch would be toward the bottom of these wicks. So we could start that, let's say, from about 33K, where this bottom was put in January 2022. So this is the 2022 low so far, up to about 35K. If that 35K were to break, then we would be looking down to that 33K range. If the price were to go down there, revisit that level and bounce, then that would form a double bottom. And there would be an argument to be made that, the macro picture is still unchanged. Personally, I would like to see this channel hold. I would like to see a higher low get put in, whether that's in the near future, maybe in the 35K range, or if it takes a bit longer, then perhaps that would be a bit higher. I would like to see, if we do revisit these lower levels, I would like to see this macro trend line hold. If it didn't hold, that would invalidate this trend line, or at least if it didn't hold on, on a weekly close basis, then that would raise new questions about, where we might be headed. As long as that holds, I think the macro picture remains unchanged. So that 35K level is important, but below that, a 33K level is also one to watch. Beyond that, we would then be looking at this low going all the way back to June 2021. That's if we consider this whole picture from this first parabolic move, which began in the end of 2020, if we consider that to be one, kind of protracted range or one period of time, then that would be the range low, and we would be looking at around 29K. That would represent probably a capitulation. And given the macro uncertainty, it certainly seems possible that capitulation could happen. There's no knowing if and when it will, but we would be looking probably below 30K, maybe in that 29K region as a potential target if there were to be a really dramatic move to the downside. So, looking at these really low downside targets is getting ahead of ourselves a little bit, but it's worth doing anyway, because one thing that you can do if you have levels set out is plan out a dollar cost averaging strategy that's dynamic. I think that for macro investors here, this is not financial advice, but my personal perspective that I think is borne out by the data is that if your perspective is long-term, then this is a perfectly reasonable area to be dollar cost averaging into the market. That doesn't mean that you're going to see profits immediately necessarily, but it's impossible to catch the bottom with any kind of reliability. You might get lucky and do it once or twice, but it's impossible to do with any kind of reliability. And so when we're in a range that's looking favorable, it makes sense to accumulate gradually so that you average out your cost basis, and that tends to translate into a pretty good average entry price. And so with these levels in mind, we can plan out a dynamic way of doing that. So let's just take these levels, for example. If you were to start dollar cost averaging in to the market right now, if you hadn't already, then you might say between 39 and 41K, I'll put in $100 a week. If 39K breaks and we go below that and approach 35K, then maybe in that 35 to 39K range between the bottom of the channel and where the volume increases historically, then maybe you double that and put in $200 a week. If that were to break to the downside, 35K, and we approach 33K, then maybe in that range you'd put in $300 a week. If that were to break and we were to go all the way back down to 29 or 30K, you could increase it accordingly, maybe $400 a week. Obviously the specific numbers would depend on your budget and how much money you want to put into the market, but that would be the kind of idea that you could put into practice with these levels in mind. If it were to get down below 29K, I think that unless there were to be some major change that just kind of threw everything into question, given what we know now, that would look like a really favorable entry point and a place to be pretty aggressive if you were looking to accumulate. But we're a long way away from there, and there's plenty of downside potential remaining. I mean, if we go over and look at the Bitcoin UDPIs, this is the long, medium, and short term, we can see that there's about equal upside and downside potential for Bitcoin on all three timeframes. That indicates that the market has reset quite a bit. We had quite low UDPI risk readings for some time, but then we had a bounce over a period of a few weeks, and that combined with some consolidation more recently has allowed the UDPIs to reset a bit. And so there's plenty of room for downside potential here. There's also room for upside potential if things were to get bullish again, but there's plenty of room for downside potential as well. And one thing you might be wondering about in this situation is, given the bearish signals that we're seeing for BTC and given these neutral UDPI risk readings that we're seeing for Bitcoin, what does that mean for the altcoin market as a whole? Is it unwise now to be holding altcoins? Is it a good time to be accumulating altcoins? Well, let's take a look at the short-term UDPIs to put that in some context. I'm just gonna get myself out of the way here just to make sure that you can see all of these risk gauges. So these are our UDPI risk gauges for all the assets that we cover, including BTC. So as we just noted, Bitcoin is about neutral on its UDPI, and that's also true of a number of altcoins. But we can also see that some altcoins, including the most important one, ETH, which arguably is not even an altcoin, is a bit elevated in terms of risk. That's also true of some others, such as Near. I mean, ZIL is in a category of its own after the parabolic move that it put in a couple of weeks ago and has now been retracing. And so the point here is that if BTC is to continue its downside trajectory, there's the potential here for altcoins to get really hammered. It's always the case that altcoins are highly risky when Bitcoin is bearish. They tend to drop more quickly than Bitcoin does during bearish phases. And that's especially true when they're a bit overextended on the short term to begin with. I do think, though, that it's important to keep the macro perspective in mind. I mean, this is why I always have this channel up, because what it reminds us is that despite this pretty substantial downside potential here, we could go back down to 35K and still remain in this channel. As long as we do that, the macro picture arguably remains unchanged. We're in an upward sloping channel here, and that remains intact, and there's plenty of leeway before there are any questions raised about that. So I think the name of the game here is to not get wrecked, to survive, and to be patient, because there's no knowing how long this will take. But the macro trajectory of Bitcoin has been up, and it's likely that we have not seen the final all-time high. It'll get bullish again eventually. Be patient, accumulate, try not to get chopped up in this market, and keep an eye on these levels: 39K, 35K, 33K, and potentially even 29K. So hope you guys found this useful. Thanks for watching.